Now, Santosh, welcome. Good morning. Thank you for joining us here on News 9. Now, after this sharp run-up that we saw, since October 26, Nifty has been on about a 7-week winning run. We snapped that last week. Are the markets now turning cautious given that, the sharp surge we have seen in the past couple of months?
Yes, first of all, good morning. Market, if we talk about the Nifty, then we have entered in a consolidation phase, Nifty and Bank Nifty ahead of year-end vacations. But yes, the overall structure is still bullish, but Nifty has to cross the supply zone of 21,500 to 21,600. Once it will cross this zone, then we can expect this momentum is likely to continue. Otherwise, market may remain sideways and there will be risk, then we may again see a dip towards 21,000 level. So for time being, there is a range of 21,000 to 21,500. Once this range will be broken in either side, then the new trend will emerge. But yes, stock specific action will be continued. Today we are seeing a strong buying momentum in the chemical space, pharma names. So during this year-end event, I think the stock specific and sector specific movement will be continued, and the headline indices Nifty, Bank Nifty may see some consolidation.
All right. And specifically on Nifty Bank, now we saw some wild movements in the latter half of the week. The index has now made 7 attempts to cross 48,000 mark, but only has managed to close above it once. Is that a major hurdle for us to surpass to see further upside?
Yes, 48,000 to 48,200 is a critical supply zone. We saw a sharp fall from this zone, but on the lower side, 47,000 acted as a strong support level. Once 48,200 will be taken out on the upside, we can expect a rally towards 48,800 level. Otherwise, the sideways movement will be continued. If it slips below 47,000, then there will be a risk for a fall towards 46,300 level, which was a key breakout level. After that, Bank Nifty saw a massive rally. But yes, for timing, it also may remain sideways in coming days.
And Santosh, what are you making of this movement in the broader markets? Time and again, even after Wednesday's shakeout, we were talking about, froth building up in the broader markets. But they have at least 3 times in 2023 alone, they have, pretty much set aside those concerns and have recovered quite fast.
Yes, completely agree. 2023 was all about broader market, and again after a sharp dip on I think Tuesday, Wednesday, we are seeing a recovery. I believe I should not use this word NAV prop up, but by the year end we see some kind of NAV prop up, and the broader market tends to do well because FIs remain absent and domestic money chase individual stocks. So this kind of trend may continue until 31st of December or maybe initial week of January. After that, I think once FIs will come back, the momentum will to be seen in the large cap stocks.
Now, Santosh, shifting focus from the broader markets to sectors and specifically IT stocks. Now, the entire IT pack has been on a roll lately, especially in December. But there is one stock that we need to talk about that has finally woken up after a long slumber, and that is Wipro. Now, the stock is on a 6-week gaining streak. In this time, it has rallied by about 20% or so, and it has also decisively broken above the multi-year consolidation zone. Now, can traders still make money in this counter on the way up? Or, given the kind of run-up that we have seen, are you cautious at this point in time?
Yes, this stock remain underperformed the entire Nifty IT space despite the good run up in last few days. We saw a massive run on Friday because of some news expectation like a new MD and CEO. But yes, still it is bullish. It is bottoming out. There is a clear base formation. I believe this 440 to 420 level will act as a strong demand zone, and there is probability that we can see a level of 500 520 in coming days. So traders can bet on the long side because downside looks limited and upside is open up to 500 520, even 540 level can be seen on the upside.
All right, another stock I wanted to pick your brains on is TV18. Now that stock is up about 4% this morning, after news came over the weekend that Walt Disney and Reliance Industries have entered into a non-binding agreement for their India operations, and there is a big big merger on the cards. Now, what's your opinion on TV18?
Generally, I tend to avoid this kind of stock because of the high volatility, but technical structure is bullish definitely. Because of the strong technical structure, we can see a buying momentum and move towards 70 kind of level. So those are some kind of aggressive traders can make a position in this counter where 48, which is a 20-day moving average, can be your stop loss. On the upside, 64 and 70 rupees should be your target levels.
And Santosh, we are in the last week of 2023, and pretty much around this time, most of the institutions are on their festive holidays to celebrate New Year's and Christmas. So the volumes are generally thin, and market tends to be quite choppy at this during this time around. So what would be your advice for the traders out there? What should they be doing over the next couple of weeks?
Yes, as I said, generally large cap, especially headline indices, may consolidate. So traders should avoid trading in Nifty and Bank Nifty for time being, because you may see some kind of intraday volatility because of the lack of volume. But yes, definitely individual stocks may see momentum because of the year end NAV prop up and some buying. So your focus should be on individual sectors and stocks where you can make good money in over the next few days. So for today's example is chemical stocks, pharma stocks are doing well, some infrastructure stocks are doing well. So your focus should be on individual stocks for next couple of days.
Right. And Santosh, before we let you go, what will be your top 5 short-term trading ideas in this current market?
Yes, as I said, I'm bullish on broader market for time being for at least for a couple of days. So first pick is my Deepak Nitride, as chemical stocks are showing strong momentum, and we are seeing some value buying in chemical space. If I talk about the Deepak Nitride, then there is a clear breakout of symmetrical triangle formation on longer time frame.
Hmm.
So it is just this start of the move, and we can expect a target of 2600 on immediate basis, where 2300 should be a stop loss. Second is I'm also bullish on mankind pharma space, and mankind pharma is one of my stock from this pharma space. It is also consolidating above 80, 1850, 1860 level, which is its 15-day moving average. Yes, definitely 2000, say 2000 to 2040 is a supply zone. Once it will cross 2040 level, then we can expect a big move. On immediate basis, 2100 is your target, and 1835 should be a stop loss. Another stock is Minda. I talk about this, then there's a breakout of flag formation. It is taking support. It's 50-day moving average. We can expect an immediate target of 725, while stop loss should be 645. Another stock is JKIL, J Kumar Infra. But I would say I shared this stock in the morning before market open, and there was a news of CLA update. Because of this news, stock has already rallied and touched my target of like 550. But I'm still bullish on this counter despite move of 14% in the morning. The target of CLS is 700 plus. So I'm also expecting the same target because recently some market investor checking in this stock. So you can even enter at current level for the target of 700 plus, but your stop loss should be 500. And last stocks is my from metal space,
Hmm.
National Aluminium. Bullish on metal space for next this quarter, because there is a clear breakout of symmetrical triangle formation in Nifty Metal Index. So you can buy National Aluminium. Currently, you can keep a stop loss of 110, and the target would be 125.